Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this episode, we're going to take a hard look at the GDP numbers released by the CSO last week. There's been a great deal of debate about what they tell us about the state of the economy. So should we be happy that the economy grew 7.1% in 2016-17? Or should we worry that gross value added, which is actually a better measure of economic activity, grew just 5.6% in the January to March 2017 period? That's the lowest in the past 16 quarters, barring the Jan-March period of 2014, when the GVA came in at just 5.3%. But mind you, that was in the dying days of the UPA government, when the general view was that the government had lost all direction. Surely now that we have a government that is much more focused and, to be fair, has taken a great number of steps to put the economy on a more even keel, growth should have picked up. So is the fall in GDP growth in the last quarter only a temporary blip, caused mainly, if not entirely, by demonetization? Or are there deeper structural issues, maybe even scars left by demonetization itself, that will continue to fester and keep growth going down in the subsequent months? I'm going to get you some of these answers and more from our panel of experts. Dr. C Rangarajan, Chairman of the PM's Economic Advisory Council to the former PM Manmohan Singh, former Governor RBI, former Member Planning Commission. I could go on, but suffice it to say, Dr. Rangarajan has been a powerful voice in policy making for the past many years. I also have with me another seasoned economist, Ajit Ranade, Chief Economist of the AV Birla Group, who, as a practitioner of the dismal science and one of the largest business houses in India, keeps his eyes close to the ground and is therefore an excellent foil to Dr. Rangarajan. Welcome to the show, Dr. Rangarajan. Ajit.
Okay, thank you.
Now that you've both had time to look through the data in greater detail, let me start by asking both of you in turn, how do you see the Indian economy? As a glass half empty or half full, and why? We'll get into the details a little later in the program, but for now I'm asking you only for a bird's eye view. Let me start with you, Dr. Rangarajan.
Well, the numbers can be interpreted in a number of ways. First of all, there has been a revision due to the changes in industrial production data and the price data. But the numbers do not change very much as far as the growth rate is concerned in relation to GDP or GVA. The new numbers indicate the annual rate of growth for the last 2-3 years, more or less at the same level as before, with perhaps 1 decimal point difference. The question then is, what do we and how do we interpret the numbers relating to the last quarter? Also, let us also note the fact that the GDP growth rate for 16-17 has not been modified from what was given out a few months earlier. It still remains, as far as the GDP is concerned, at 7.1%. But the quarter 4 numbers do indicate a definite slide, and this is partly because of demonetization, and partly because of what I have been seeing, a declining trend in the growth rate from one quarter to the other quarter. I believe that the decline, almost a contraction in the construction sector, could be partly due to the demonetization liquidity effect, as well as partly some intended effect of demonetization. I shall explain it later. But the fact of the matter is that the growth rate has slowed down.
Okay.
And the demonetization must have had an important role to play in that.
Okay.
And the third aspect of it is that we see a continuing decline in the gross fixed capital formation.
Yes, sir.
Now, according to the latest estimate
Yes.
of 2016-17,
Yes.
it is less than 30%.
Yes.
It is 29.5%.
Okay.
Therefore, as far as the medium-term growth is concerned, there is a significant compulsion to raise the level of investment in the economy.
Okay, sir. We'll get
growth
to that.
can happen.
Yeah, we'll get into that a little later, sir. But let me just ask Ajit right now whether he shares your view from what I understand from what you say. You see the glass as largely half empty. Ajit, would you agree with that?
I would echo a lot of sentiments that Dr. Rangarajan said, but let me clarify. First of all, we've had three major changes in the way we look at GDP in the last few years. Number one was switch over to this GVA methodology. Second is the change in the base year for industrial production data and the data for inflation. Inflation matters because that's the way we calculate deflators. So because of these three changes, it's becoming a little difficult to do a long-term, pre and post comparison of the data series. But having said that, let's just step back and look at the annual data. So we have gone from roughly 8% GDP growth rate to 7%. And if you're looking at GVA, you've gone down from 8% to 6.6, which is a pretty significant fall. In a year when we got very good rainfall, we got record inflow of FDI, we had moderate inflation, we had a stable exchange rate, and we had very good inflows into the capital markets. So and of course relatively low and stable crude oil prices. So we need to be concerned about that. So demonetization was an episode which happened during the fiscal year. But even if you look at the larger picture, we have to be concerned about the fact that in a year where many factors were in our favor, our growth rate has gone down by at least a percentage point or 1.5 percentage point. This is something we need to look at. Secondly, as Dr. Rangarajan said, the longer term trend of 5 years in a row, our gross fixed capital formation, or basically investment to GDP ratio, which portends future GDP growth, has steadily gone down from roughly 35% to 27%, which is a fall of 8 percentage points over 3-4 years. And that is, largely the factor there is that private sector investment spending is really not picking up the way it should be. So that's my second point. And the third point is a small limited point, that a big contributor to growth in the last quarter and over the whole year, in the last quarter 39% growth in government consumption spending, and over the whole year 20%. So if you take away the contribution of agriculture, which was coming after a 2-year drought, and government spending, then of course the remaining part of the economy is not really pulling its weight.
Okay.
So I am concerned.
Okay, so clearly both our experts believe the glass is more half empty rather than half full. But Dr. Rangarajan, a lot is being really made about the dismal Q4 numbers. And while it is true that GVA at 5.6% is not only close to the lowest in the past 16 quarters bar one, it's also a sharp fall from the 8.6% recorded in the comparable period last year. But the fact is that quarterly comparisons are often fraught with danger since they tend to be subject to revision much more frequently. So should we be looking at the annual number, which is much better? Or should we assume that the slowdown in Q4 is the cause for concern and we should focus on that?
Well, quarterly numbers do tell us something. I mean, I think it is not as if that we can completely ignore them. Obviously, we have greater confidence in the annual numbers rather than the quarterly numbers. And there was a good deal of discussion and concern at the time when the quarterly estimates were introduced. Therefore, I think let's examine a little bit about what the Q4 numbers do indicate. First of all, as you mentioned, the Q4 numbers may be affected by the fact that the previous year in the corresponding quarter the growth rate was very high. Yes, as Ajit mentioned, if you leave out agriculture and public services or public administration, all the other sectors show a growth rate which is distinctly lower than the corresponding period last year, as well as the previous quarter. But I think on the construction industry, I do want to make this point that the contraction in the construction industry can be attributed to two factors. One is the liquidity constraint arising from demonetization. Perhaps the construction workers could not be paid, and so on and so forth. But there is also the other factor, namely the construction industry is the one in which there has been a large use of cash and large number of transactions were happening which were not above the board. Therefore, to some extent, the intended consequence of a demonetization should be to affect those industries or those sectors of the economy where a certain amount of the use of cash has been due to motivations which are not legal. Therefore, to some extent, it is a shock effect on the particular sector, namely on in the construction sector. But the point really that you said is, you asked me, is that whether the Q4 numbers really determine what the rate of growth in the next year will be. Perhaps not so. I think to some extent the demonetization effect would be taken care of because of the remonetization efforts. But the fundamental point is that unless the investment picks up, we are going to be in a situation in which the growth rate is not going to show any big jump. I think it is there we need to really focus on.
Ajit, we look at the impact of demonetization a little later in the program, but would you agree that despite whatever doubts you and Dr. Rangarajan expect, markets, in fact both stock as well as currency markets, don't seem to be particularly perturbed at the slowdown in the fourth quarter. So are we economists just living up to our reputation, or are markets being irrationally exuberant, because we've seen both the Sensex, the Nifty, the rupee all strengthen post these dismal numbers?
Well, Mythili, first of all, the rupee strengthening temporarily and the stock market inflow of dollars is correlated. Okay, and the stock market flows, especially the portfolio, FII flows, it reflects relative performance. So, India is still growing at 7% GDP growth rate in a world where the growth rates are much lower. Look at what's happening in Brazil. Look at the fact that China has got a rating downgrade. So in a relative sense, Indian markets of course look attractive. So I'm not, we can't really speculate what is the right price to earnings ratio, whether it's overpriced or not. But yeah, and the correlation between the stock market and the underlying GDP is there's always it's not perfect. The stock market is looking at the future outlook. The GDP data that's coming in is from previous quarters. I just made that point that 8%, from 8% in FY16 we have gone down to 7% in a year where we should have actually had a much better performance, or at least on par. So to that extent, demonetization probably had some impact, and I hope, like Dr. Rangarajan said, that this is behind us now, and the outlook for next year is on in an upward trend. I also want to quickly touch on exports, because that's one area which has done well in the last 5 to 7 months, but we have come down from $300 billion of exports merchandise to about 250, 265, and now slowly going back to 300. And in 2 years ago, we had an ambition of reaching $900 billion of exports in the next 5 years. So we have a lot of catching up to do, and that really is correlated with our domestic performance. I mean, domestic ease of doing business, or the health of the manufacturing sector.
Oh yes, there's a lot that we have to do and a lot more for us to discuss also in this program, but after a short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're trying to make sense of the latest GDP numbers with our panel of experts, Dr. Rangarajan and Ajit Ranade. Dr. Rangarajan, a disaggregated view of the numbers suggests that but for public administration, in fact that Ajit also spoke about, which grew at about 17%, in agriculture that grew at about 5% thanks to favourable monsoons, economic growth would actually have been much lower. And also, as you yourself mentioned, the gross fixed capital formation, which is actually a measure of the investment, is only 28.5. That again is a 16-quarter low and is way below the high of 38% that we saw in 2007-08. So does this suggest that there are some deeper structural problems underlying the slow growth?
Well, it is, whether you call it structural problem or not, there is a problem in terms of the confidence that has to be built in, and also the wherewithal to be built in order to make the investment. Initially, it could have been because of purely psychological and other factors. But now we have reached a situation in which, unless this investment level picks up, we will not be able to have a sustained growth. Let me also say the point that growth can occur because of two things. One is the better utilization of capacity. Second, by adding to capacity. Perhaps the high numbers that we have had on growth in recent years, these are respectable numbers. I mean, if you look at it, and there has been a year in which the growth rate has also been 8%. Therefore, these are not numbers to be snided at. I mean, they are good numbers. But the fact is that much of it must have come because of the higher utilization of the capacity rather than of fresh investment. People talk about jobless growth. This is the big distinction. A growth that occurs because of simply better utilization of capacity will not generate as much employment as a growth which has been spurred by fresh and new investment. Therefore, from various angles, it is important to see that we get the investment going. Public investment has shown improvement, and I think it is also reflected in the fact that some other sectors in which the public sector is dominant is also producing better. But the pickup in the public investment must lead to a pickup in the private investment, and that is perhaps, as you emphasize and as Ajit have emphasized, is the key to getting a higher growth in the future.
Ajit, would you agree, as Dr. Rangarajan says, we must see more investment, but that's not happening. From the industry perspective, what explains the following investment over 16 quarters? After all, the government has undertaken a fair number of fairly far-reaching reforms, but nothing seems to have changed on the ground. Why? Is it because these reforms will take time to bear fruit? But will the people be willing to wait? Can we continue with jobless growth, as Dr. Rangarajan mentioned?
No, I think, Mythili, this should receive urgent priority now about how to revive private sector investment spending, big and small, in a big way, give it a big impetus. Now you mentioned, for example, bank credit growth during last, this fiscal which just ended, FY17, was barely 5.5% or something, which was the 50-year low or 53-year low. And if you look at bank credit flow to industry, that is, take out the retail loan growth, it was really very low. In fact, in the last few months, I think it was contracting, it was going down. Of course, people say that maybe corporates are accessing perhaps the bond market, maybe foreign loans, ECB or retained earnings. But the fact is that the credit outflow from banks to industry, which is a leading indicator, is very low. Now, it's also because of the banking problems and stress of NPAs. In terms of the other very the troubling indicator is the investment to GDP ratio. Now that can be both public sector and private sector. So at a time when our public finances are benefiting from low oil prices and therefore some relief on the subsidy bill, it's a good thing that the government has managed to pass on some of those benefits to increasing spending on infrastructure. For example, the last budget, almost 3 lakh crores, I believe, or 3.9 lakh crores were allocated to infrastructure. So until the time that the private sector spending or investment spending comes back, the public sector will have to kind of provide the stimulus. But this is definitely a biggest priority. And relatedly is the jobless phenomenon which Dr. Rangarajan also referred to. In the 8 sectors tracked by the Labour Bureau of the government, the jobs that have been added, it used to be at a run rate of something like 10 lakhs about 5 years ago. That rate has come down to just 2 lakhs or 2.3 lakhs. So therefore, we are not adding jobs in those conventional sectors, those 8 sectors tracked by the government. So clearly GDP growth is going on, maybe informal sector, casual labor is increasing, but that's not the kind of quality of labor or job growth employment growth that we need to see. So on both these counts, incentive or getting private sector spending back up again in investment spending and getting large scale job creation, livelihood creation, entrepreneur creation in a big way.
Dr. Rangarajan, Ajit is entirely right. We need to do something, and until this private investment picks up, public investment has to come to the rescue. But the interest really in GDP numbers is not so much for the numbers per se. Of course, it does give us bragging rights as the highest growing economy and now the second highest after China and so on. But the importance of the numbers really stems from what do they suggest for policy. That is, should policy try to stimulate or apply brakes on the economy? And this is critical because if you remember what happened in 2010-11, GDP for growth first came in at 6.8, then it was revised to 7.7 and finally to 9.1, resulting in both fiscal and monetary stimulus continuing for much longer than is warranted. Is there a similar danger now? Do you think these numbers will undergo extensive revision, and in which way?
Well, the numbers have been undergoing changes. I mean, I think we already have had 2 revisions. But I do not think that there will be further changes in the numbers in any significant way. But on the whole, the numbers look respectable because in the world of today, 7% would be regarded as a highly valuable rate of growth. The point really is, yes, the number of things have been done which will have an effect upon private sentiment and what they call the animal spirits. But even, for example, a good measure like GST will have its own teething problems, and its own impact on the economy will be felt much later. But the problem with the private sector investment is compounded also by the inability of the banking system at the present moment to be able to provide the support. People talk about the twin balance sheet problem. It is essentially, in my opinion, the one is a reflection of the other. They are two sides of the same coin. If the corporate balance sheets are weak, then automatically the bank balance sheets also turn out to be weak. Therefore, some serious effort will have to be made now in order to be able to restart the process of lending to the corporate and the private sector in general. It is easier said than done, but unless that process also starts, it is going to be very difficult for the private investment to pick up. Maybe the sentiment has changed, but the change in the sentiment has to be supported by the adequate flow of funds. That is why I had elsewhere suggested about going back to the earlier idea of an IDBI type of institution, which can be not necessarily be in the government sector, to be able to provide long-term credit or long-term funding to the private sector. But that is one of the ideas. But basically, we need to address very clearly how quickly, apart from other things that have been done, the banking system can restart and be able to provide the necessary funding to the commercial banks.
Ajit, Dr.
I'm
Rangaraj,
sorry, to the private sector.
That is true. Ajit, Dr. Rangaraj is absolutely right. We need to do something to get the banking sector to start lending again. But let me now turn to the most controversial issue really before us. Is demonetization really responsible for the decline in growth that we've seen in the fourth quarter? Or is it more being made of it than is really warranted?
See, first of all, it is accepted that the demonetization affected sectors which are typically cash intensive. So, for example, real estate and construction, and as we saw during the fourth quarter, construction actually did not grow but contracted by 3.7%. So, I think that is related to the phenomenon of demonetization. Secondly, in the informal sector, the informal economy is supposed to add something like between 40 to 45% of GDP, and the informal sector tends to use more cash than the formal sector. So that impact of demonetization on the informal sector is not captured adequately, at least in the Q3 data, and we were hoping that Q4. So I think in the next 2 or 3 quarters, this data will become clearer. So I think these two definitely had some impact. It got offset by the fact that we had very good agricultural growth, and we had almost a 39% growth in government consumption expenditure during the fourth quarter. So that got offset, and that's why we had the number that. But it's true that demonetization must have had, at least on the cash intensive sectors like real estate and construction and the informal economy.
Dr. Rangaraj, your quick thoughts on demonetization. Has it been in retrospect a price worth paying?
Well, the impact of the demonetization, as Ajit mentioned, would be felt in those sectors in which cash is the main medium of exchange, and that is very clearly seen in the numbers also. Such a step like demonetization will have some amount of destabilizing effect. In fact, the liquidity constraint could have been avoided had the availability of currency has been more easily available, has been more easy. If that had happened, then perhaps some of the liquidity effect that we talked about would not have been there. But the fact is that it is behind us now. perhaps that liquidity impact would be over as remonetization picks up even greater speed. Therefore, the only other thing is really that whether any long-term effect in terms of changing the behavior of the people will happen or not. That is very difficult to see. The other long-term effect is
better handled, but it's behind us now. But I'm afraid that's all the time I have in this edition of Macros with Mythili. So we'll have to call an end to this discussion. Thank you so much, Dr. Rangarajan and Ajit, for taking the time out and hopefully clearing some of the doubts of our viewers about how they should look at these numbers. Trust but don't judge in haste seems to be the verdict, and I entirely agree with that. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now. In case there is any issue you'd like to hear discussed in this program, do write into us at the email ID you see at the bottom of your screen.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.